On today's Hot Sheet, I'm discussing the most updated home price forecast from Zillow and JP Morgan, off-MLS homes, what's happening with that. FOMC minutes are now released, as well as weekly unemployment data. Today is Thursday, February 20th, 2025. I am Byron Lazine, and the Hot Sheet starts now. Good morning. Welcome into the Hot Sheet. Let me know in the live chat which market you are tuning in from. We notice on BAM here on the YouTube channel that a large percentage of the audience that consumes our content every day isn't actually subscribed. So if you love the Hot Sheet, one way to support what we're doing here on YouTube is to just go down and hit that subscribe. Would love for you to consider doing that. Hit the subscribe and the notification bell here so you don't miss any of our live streams here Monday through Thursday, 9:30 on the East Coast, 6:30 on the West Coast for the Hot Sheet. Carmelo, thank you for the kind words. Carmelo coming in early, a little ahead of schedule there. I hope Carmelo's still hanging. And thanks for being a BAMX member. Appreciate that as well. School.com/BAMX if you want to jump into that. All right, we got a bunch going on here. I'm going to start with JP Morgan, then I'm going to move into Zillow. So JP Morgan has their updated outlook for the 2025 U.S. housing market. Then we've got Zillow's updated outlook. Then the dispute between off-MLS homes. Zillow, from the CEO level, has some commentary on that. FOMC released their minutes and unemployment. So we just got a whole bunch here to get through. Here's the big takeaway on JP Morgan and their research. And JP Morgan's a big name, right? So I've already seen it in some of the headlines. This is something that consumers might see, but it's also something that some buyers might avoid with their eyes, because I don't know if you're hearing this, but a lot of buyers right now are saying, I'm going to wait for home prices to come down. Waiting for home prices to come down means you're waiting for everybody else to re-enter the market with you and push those home prices up. This year, we don't see home prices going down. There's not many analysts that do. JP Morgan Chase isn't one of the analysts that expect home prices to come down. In fact, they expect them to go up 3% overall in 2025. Now, 3% is a more natural number. It's not really, doesn't have that much significance. The significance of 3% is when it's compounded over time, right? When you buy a house and then you're there for a decade, like most people are, and you get 3% a year compounding over time, all of a sudden you're near 40% when you net it out. And so JP Morgan Chase expecting home prices to go up 3%. It's like advantage sellers in my eyes, because 3% means my value of my home hasn't really changed. In fact, I'm getting some of my fees paid there by the slight increase if I'm a seller. So buyers who are waiting for these home price drops, they're going to, at the end of this year, the home prices are going to be pretty much the same, according to JP Morgan Chase. I think what's more important for buyers to understand from JP Morgan is that the higher for longer interest rate backdrop, it's here to stay. So this here, and again, it's according to JP Morgan, but it's a way to educate buyers. Okay. JP Morgan just released their outlook on this year's housing market, and they do not expect mortgage rates to ease. Okay. Only slightly, to a 6.7% number by the end of the year. Okay. Rates right now are at 7.02 as of yesterday in Mortgage News Daily. You can buy down to 6.7. You can buy down to 6.7. If you're so, on the board, we know most mortgage holders right now, we just look at the FICO score, are over 720. Okay. So if you're trying to scrape it together to buy a home and you can't buy it down and all of that, it's unlikely you're going to find inventory that's suitable to you anyway. I'm just keeping it real. So the people that can afford to buy a home in today's market, which we know is not everybody, we know it's a monster problem. We know we'd love to see a solution to that. There's not one coming in 25. But here's the deal. If you can afford 7% you can just buy it down to 6.7 as opposed to waiting to the end of the year. The objection that I'm waiting for rates to come down seems like somebody who doesn't know where they're going to live in 3 years. Okay, there's really three. And listen, I just shared this with my team. There's three strategies really that a buyer's gonna use. Okay, strategy number one is exactly what you just said, Mr. and Mrs. Buyer. It's I'm gonna wait for the rates to come down. I'm gonna continue to rent. The people that are most successful just staying in a rental are the ones that need the flexibility of moving again in 2 years. And that's usually out of area, because if you're not going to be in the area for, more than 3 years, I think you should do exactly what you just said. Strategy number one, which is rent. Now, the next two strategies for people who are going to be here 5, 7, 10, 15 years. The homeowner average tenureship right now is 12 years. If you know you're going to be in this area because of the school, the community, the job, the whatever, then you just can't time the market, right? And we know prices, what they've done the last 4 decades. We talk about it here on the hot sheet all the time. And we know where prices are going to go when we stretch it out over 10 years. So you can't time the market. Warren Buffett says this about every other investment in the world. Why don't we believe it in real estate? And then strategy number 3 is those buyers who are expanding the drive, the commute, the 15, 30 minutes outside the radius of where they primarily want to be to negotiate better deals and bring that affordability into picture for them. So really, those are the 3 strategies. Number 1 only works if you're not going to be here for 2 or 3 years. Then yeah, you absolutely should rent. But waiting for rates to come down, even if they did, if we saw some black swan event and rates came down, there's either 2 things that happen on a black swan event. You don't have the money anymore to buy, so it doesn't matter because you just lost your job, black swan event. Or number 2, it's a black swan event where these rates move down rapidly and everybody enters the market. Think end of 20, early 2021. And when everybody enters the market, what happens? There's 20 offers on homes and home prices get pushed up. We have enough history to tell us what happens when we're waiting for rates to come down. Okay. And then we're going to get into here on JP Morgan's analysis, some interesting comments, especially at the end of this analysis, about the new presidential administration's policies or lack thereof as it relates to housing. We haven't seen much in this department yet. We're going to get JP Morgan's outlook on that, and I'll break that down. Brad says he said that to so many buyers. I'm curious, Brad, is that helpful for buyers when they get the big picture, when they sit back and really understand the big picture? Are they more comfortable moving forward? The confidence of being able to go make a purchase comes from feeling confident. You don't have confidence without feeling confident. That confidence comes from education. All right, let's jump into some of these charts here on JP Morgan. Just walk through some of the outlook that they have. Again, it's 3% rates. 3% home price increase. We're about to get to Zillow's home price increase. They've adjusted it quite a bit. They adjust it every single month, but over the last 30 days, Zillow's made a big adjustment. JP Morgan Chase at a 3%. I think that feels pretty much, natural and normal if you look back over time. All right, jumping into the BAMX platform, I'm going to bring up some of these JP Morgan charts. By the way, if you want to get access to all of the hot sheet charts, just jump into BAMX. School.com, SKOOL.com/BAMX, and you get access every single day to all of the charts. All right, you can easily just download those right here, top right click. All right, here's one of the things JP Morgan released. There's a blended chart, blended homeowner and rental vacancy rates. So you've got a mortgage rate up in the 7s. That's that green line, the mortgage rate. Then you have a rental vacancy rate that is up closer to 10%. That's a pretty, I know when you look back historically, it's not a huge number, but it's, hey, if there's 10% on the vacancy rate, then that means there's just a lot of options available for a would-be renter. So that, as you see that mortgage rate increase, obviously that vacancy rate does come down as the rate decreases here. You see more people that are leaving those rentals. And so it's also a chart for being able to explain the fact that, okay, if these rates do move back down here, what happens with vacancy rates? They're going to increase. So if you're going to continue to wait and rent, you're going to be re-entering the market when everybody else, which is right here, this is when all those renters re-entered the market when rates drop down. Okay, you're going to be re-entering the market at the same time as those other as everybody else that's saying the same thing that you are. It sounds smart. I'm going to wait. I'm going to time the market. You're going to time it with everybody else when there's 20 offers on the house and it's pushing prices up, as opposed to locking in now, getting the right home for you now. And then if rates do come down, which there's no indication that they're coming down anytime soon, but if they do, you can readjust payment there through a refinance. And you've also gained equity by everybody re-entering the market and pushing the home values of your price of your home up. Existing home sales and inventory obviously remain near this. And here's one of those other indicators that you're not going to see prices come down. I'm waiting for prices to come down. Okay. How? Look at how low inventory is. And 40% of homeowners right now, 40%, you drive down the street, 4 out of 10 homes do not have a mortgage. I mean, that is something every buyer I'm talking to, that is something I'd make sure that they fully understand. Like, when you go home tonight, every 10 homes you go by, 4 of them have no mortgage, which means when you're waiting for prices to come down, 40% of people, even if they did put their house on the market, aren't giving you a deal. Once they say my house is worth $550,000, it's never not going to be worth $550,000 in my mind again. Oh, my neighbor got 625. I'll never sell under 625. And guess what? I don't have a mortgage, so I just won't sell it to you if I don't get my number. Okay. Now, out of the 60% that do have a mortgage, the vast majority of them are under 6%. They've got to get a great number in order for them to give up that interest rate. Imagine if you were in their shoes. Would you sell your house for a discount? You wouldn't. So what are you waiting for in terms of somebody to give you a discount? And unless you're in a, on a market that's producing a lot of new inventory, Southwest Florida, parts of Texas, unless you're in a high new construction area, then there's just not the leverage of inventory to bring these prices down. Okay. You're seeing that in some of those pockets where they've overbuilt. A lot of the overbuilding has come at a high price point that's not affordable anyways. Multifamily construction starts and completions. Here, according to JP Morgan, you've got a whole bunch of stuff under construction, but the numbers on a sharp decline here as these rates have popped up. Completions are kind of at a high point here over the last 40 years, and then starts have completely plummeted here with those rates. So that's JP Morgan's outlook there on the multifamily sector. Now, I want to jump back into JP Morgan real quick before we go to Zillow. If we just take a look at a couple of the comments on what's going on with the Trump plan, the Trump administration, on the way JP Morgan handles a ton of wealth in this country. So they're looking at all of this obviously, and picking it apart. So JP Morgan, John Sim, head of securitized products research at JP Morgan, says by reducing immigration and lessening demand, Trump argues that housing costs can be reduced. It's not that simple, though. I agree on this. Cutting immigration would mean cutting labor supply in the construction industry, which would end up exacerbating the lack of affordable housing. I mean, it would, listen, we already have, there's a couple things here. One, I agree that immigration is not the issue on high home prices. Okay. High home prices have come by printing trillions and trillions and trillions of unnecessary dollars and pumping them into the system. What did we think was going to happen with a hard asset? Okay. Think of the $2.3 trillion in 2021 that we printed for absolutely no reason. COVID was over. And then you've got, so I don't agree with the Trump administration that, okay, we reduce immigration, we're going to lessen housing demand, and all of that. When I think of it from a home purchase standpoint, okay. Now this is interesting, that 30%, and that's the number, 30% of construction industry workers are immigrants. Now, I don't know that all this construction has really helped affordable housing. New homes are, average and median price homes are well above what existing homes and well above what a starter home in most markets are. So, and that's why you got 9 months plus of inventory on new homes. Now, two things that Trump administration has said that they're going to do. Here are the two primary solutions without having specific plans that have been put in place here. I know we're 30 days in. I'm just only 30 days in. I'm just saying, here are the two primary solutions: streamlined zoning approval process. Now, I agree with JP Morgan Chase that, okay, we can say this from a federal level, but it doesn't mean anything. It has to be addressed at the local level, unless you're going to do this on federal land, which means, number two, making federal land available for new housing construction projects. Okay, if you're going to make federal land available, which really that's like, really only out west do you have federal land, like Nevada, you could do this, where you make federal land available, deregulate, and do it on a deal to make affordable housing. Okay, you could do that, but I haven't seen that in the plans. So, as for other solutions that have been floated out there, JP Morgan rather does not see those as happening. Multifamily construction areas zoned for single family homes, unlikely under the Trump administration. Trump has generally opposed those types of developments. On the demand side, Trump has been less vocal about solutions, but he continues to point towards immigration. That 30% number of construction workers being immigrants has other impacts on that. So it's evident, though, to JP Morgan that numerous aspects of Trump's overall policies will impact the housing market. Think tariffs we're talking about yesterday, what's going on here with, Fannie Mae, Freddie Mac, what's going on with HUD. All these different things are going to, when you add them up in 12, 24 months, you're going to look back and say, okay, these were the implications, the benefits, the things that worked, the things we didn't, expect to happen. Like one of the things JP Morgan thinks is that if you privatize Freddie and Fannie, that you're actually going to see higher mortgage rates. Okay. But for now, what JP Morgan is saying is all we can do is wait. It's 30 days or whatever it is. And I think it's actually exactly 30 days. Today's February 20th. So 30 days in seems like a lot longer. But it is only 30 days in. There's been a lot of things like might do a tariff, might not, pull it out, pull it back, all these different things. When we get 12, 24 months into this administration, we're going to see more information kind of take shape. All right. So JP Morgan, the big key takeaway there is 3% rise on home prices. So people waiting for home prices to come down, not happening. 6.7 by year end on the 30-year fixed rate. People waiting for affordability on the rates. JP Morgan says not going to happen. You, as the real estate professional, don't have to say it's not going to happen. JP Morgan says it's not going to happen. What does Zillow say? Here's a brand that consumers certainly pay attention to in their search habits and their app usage. So what does Zillow say? Well, Zillow just actually changed their forecast. Now they have home prices going up, but that's just under 1%. They've changed it now to 0.9% increase. And this is a drop from the expectation of 2.9%. So they've carved 2% off of their increase for home value growth in 2025. Okay, so new listings have been higher than what were expected, still relatively low in comparison to history. Inventory expectations have put downward pressure on Zillow's forecast for home price growth. Now, like I see that in Southwest Florida. I see that in Texas. I see that in the Gulf states for sure, where you have inventory coming up, but not in the Northeast, not in parts of the Midwest. Okay. I think inventory in California has probably only gotten tighter with what we've seen the last, couple months. Existing home sales right now, according to Zillow, expected to reach 4.11 million in 2025. That's consistent with their outlook last month. And it's also consistent with where we were last year. So Zillow saying what we talked about on the Knowledge Brokers podcast this year, going to be a lot similar to last year. Don't expect huge bumps this year is what Zillow is saying. So home prices, according to Zillow, expected to be sideways, be flat, basically 1% increase. And, not near that 3% that they were previously at, that JP Morgan is at right now. What Zillow's not saying is that home prices are going to go down. So if a buyer is looking for relief on prices this year, Zillow's not in that camp. Okay. A 1% increase is not, it's really moving sideways, but it's holding firm at these high prices that buyers are being faced with right now. All right. Rolling over now into off-MLS, the dispute, the clear cooperation dispute for real estate agents. You know exactly what that debate has been about. Zillow is putting themselves right in the middle of the off-MLS conversation. Off-MLS homes, the clear cooperation. Should every single home be on the MLS or should it not? There's been debates throughout our industry on this. One of the proponents of clear cooperation, or one of the one of the people who objects clear cooperation would be Robert Revkin of Compass. I'm just using his name as one of the most prominent names in our industry to oppose the clear cooperation rule. On the other side, now firmly, you have Zillow. I'll tell you exactly who is leading this charge at Zillow. But first, let's take a look at a study. You're starting to see now information come out from Zillow to support their position. Off-MLS home sellers, according to Zillow, left more than $1 billion on the table the past 2 years. Wow, that's quite the headline for anybody who's thinking about not going on the MLS as a seller. Okay, this might get some opens if you're sending this out as an email. The typical home seller who did not list on the MLS sold their home for nearly $5,000 less. Okay, so now when you would break that down across the board, it's $5,000 less. New Zillow research reveals a significant financial impact on home sellers who do not use the MLS. The study examines homes from 2023 and 2024. And, what do we know about those 2 years? Pretty, with where inventory levels were, you could sell your house. Okay. So you would think, why do I need to be on the MLS during these years? Inventory is low. I mean, I could sell my house, but not being on the MLS, Zillow found that you're going to sell for less. They meaning the home sellers. Okay. They had a median loss of 1.5% nationwide. The loss is much more significant in some areas. California is an example. Typically more than $30,000 they lost selling off of the MLS. This Harris 2025 Zillow Harris poll surveyed more than 2,000 U.S. consumers, found 63% who have sold a home within the past 5 years say their agent recommended listing on a private network. 63% of consumers say their agent recommended listing on a private listing network. That's compared to 18% who sold more than 5 years ago. Wow. I'm shocked, but let me know in the comments, are you shocked by that number? That 6 out of 10 agents recommended listing on a private listing network. I mean, I'd like to double click on that. Is that like as well as the MLS? Like, let's listing as many, which, private network doesn't mean anything if you're on the MLS, but I'm just like, I'm confused there by that number. Justin, the Antlered Realtor, says in Denver, the loss is much higher than $5,000. So yeah, obviously price dependent, location dependent. That's just the average across the country. But are you surprised as an agent by Zillow Harris poll finds that 6 out of 10 agents are suggesting to their sellers, this is according to the consumer, that they list on a private listing network? I mean, I think everybody, even those that object, clear cooperation, I think everybody would agree that the more eyeballs you get on the property, the MLS is the strategy to drive price up. That might not be every seller's goal, which is the objection there. But I'm surprised to see 6 out of 10 would suggest, because 99, 98, 95% of the time, it's like going to make sense to go on the MLS. So, not sure why that suggestion is coming through. Zillow certainly stands on the other side of this. They stand with NAR. They stand with really a whole bunch of the brokerages outside of Compass and maybe a few other ones. Certainly Mauricio from Agency. Hope Mauricio is doing well. So he had a skiing accident there recently. Hope he's feeling better. But Zillow is leading the charge along with NAR and others to say clear cooperation is the way forward. In fact, Zillow is so aggressive about it that they put out a press release by Jeremy Waxman. That's the CEO. Okay. The CEO of Zillow doesn't, comment on many things. And so by writing this on February the 17th, it shows you how important this is to Zillow and their business model for sure, but how they feel about it. Private listing networks are damaging the housing market, harming buyers, sellers, and agents. If they couldn't be any more direct than that, I don't know what other way they could frame that. They say sellers lose money so some brokerages can gain. So the CEO of Zillow taking a direct shot at other brokerages by saying, hey, you're out here to gain at the seller's expense. Okay, making it really about them in this pocket listing private network, type of environment. And they're making their position very clear. I know this debate's going to continue here throughout this year. If you feel the way, and which right now it seems like the greater numbers are sitting on Zillow side. There's some great, charts that we dropped into BAMX here that you can use, especially if you're in Washington, California, Massachusetts, New York, and New Jersey. You want to grab this one: homes sell for less on a private network. If you're going up against somebody who's pushing private network, that to me would be a slide you'd want to show them. Here's where Zillow says they say 97% of agents are against, basically, doing away with clear cooperation. 97% of agents, according to Zillow, say they want clear cooperation. They want all listings. They want to have access to all available listings, meaning all listings go on the MLS. 91% of buyers want to have access to all listings for free. So that's according to that Zillow research as well. All right, staying here inside of BAMX, where you can get all of this stuff at your fingertips. I'm just going to bring up our fourth and final here, which is unemployment. And you can see here, unemployment here for the better part of the year has just been continuing to move sideways. Unemployment here for the past week was up a tick. Unemployment's initial claims was 219,000. It's an increase of 5,000 from the previous week's revised level. And the previous week's was revised up by 1,000 at that. So the 4-week moving average is 215,000. Which is a decrease of 1,000 from the previous week. So you're not getting any relief on unemployment right now. Job sector continues to not be as white hot as it was a couple of years ago. There's a lot less job openings, but unemployment's been very stable, near 4% for quite some time. We've seen it get up as much as 4.3, back down to 4.1, 4. We're kind of just hovering in that range. There's really no, employee belief that there's going to be, job loss in the future. We've seen those confidence scores. We have no reason to believe there's going to be a whole bunch of job loss. So job market remaining, pretty strong here. You're not going to get that relief on the long-term rates from the job market. Logan Motoshami, for example, from HW says you're not going to see, the 10-year and the long-term rates really move downward in a significant, meaningful way until the labor market breaks. Today, we're trending on a 10-year at 4.494. So a little bit of relief off of yesterday, where we stayed in line on the 30-year fixed at 7.02, stayed in line with the day prior. So we'll see if this can move us back down into that mental barrier range of 6.99. We know where JP Morgan sits on this. Like, hey, just get used to 7. Because the end of the year, you're only going to have gradually declined to 6.7, which again, if you're a qualified buyer, you can basically buy your 7 down to 6.7 today. Okay. There you go. There's your hot sheet. For those of you that are not BAMX members, make sure you jump in. Here's the platform. We just moved over into School, #1 community and education platform on the planet. Where we've actually brought the Facebook group into this community. Facebook groups are filled with spam. DMs are the worst place possible to communicate with people on Facebook. There's so much crap in there. You notice that my DM right here has no notifications because I check every single one of them. This is the best way to communicate with me. If you send me a DM on Instagram or Facebook, it's probably a 30% chance that I actually get to it. This is going to be the best way to reach me right here on the DM inside of BAMX, as well as access all of our content, all of our done for you content, the weekly content drops, the social media templates, the video scripts, emails, blogs. We upload more into this database every single week for you. And as well as the hot sheet show notes. Every single day we have our hot sheet show notes right here for you to grab those charts, and as well as all of our original sources, and ultimately the show notes of how we make the cake. It's all right there inside of BAMX for you. So I'd love to see you in there. It's school.com/BAMX. We have live office hours every single week. Next week, I am doing the live office hours, and it's going to be live role play Wednesday, 3 p.m. live role play. Bring your objections. We're going to solve for them in real time over there inside of BAMX. That'll be 3 p.m. Eastern tomorrow. You can find that right on the calendar tab right here inside of School. You just click on it, add it to your personal calendar, and you are good to go. All right, there you go. There's your hot sheet here for the week. Hot sheet brought to you each and every single week by Zoodealio. Zoodealio gives BAMX members their platform for absolutely free. Just being a BAMX member, that's a $2,400 value in and of itself each and every single year. All right, there's your hot sheet, not only for the day, but for the week, as we do this show every Monday through Thursday, 9:30 on the East, 6:30 on the West. It's been a pleasure doing the show with you. Love for you to consider subscribing to the YouTube channel. We notice a whole bunch viewers do not subscribe. It'd mean a lot. It's a free way to support everything that we do at BAM, and love for you to hit subscribe down below. It's super easy and it's free and it's painless. It doesn't hurt. You just hit that subscribe button down below. We've got some the walkthrough coming here on the channel later on today, a new walkthrough episode, and then tomorrow over on Knowledge Brokers, a new Knowledge Brokers pod as well. So a lot coming as always with BAM. Appreciate all of you. Thank you very much. Have a great week, great weekend, and I'll see you guys soon. Until then, toodaloo.